Good morning, traders. It is Tuesday, May 27th. I hope everybody had a great long weekend. I spent the weekend hiking and getting some exercise, getting ready for Kilimanjaro in a few weeks, and just been hiking up our local mountain, which isn't massive. It's only about 1,000 feet, but I'm putting in 1,000, 2,000 vertical feet each day. You can see this hike, beautiful water here, just amazing weather for going. And yesterday, the long weekend, we had an epic sunset. This is going down. This is off my dock and over the escarpment here. And this morning, I got up early, and it was full of these egrets, and really just enjoying the morning, having coffee with my little dog Leo. And anyway, just priceless way to start the week and kick things off. Markets are having a nice pop. We obviously had a little bit of a move up over the weekend with stocks. We had more Trump or tariff news with the stocks rallying pretty much with the Trump reprieve on the European Union. And so we have a nice pop in the futures price, up about 1.5% for most indices today. Now, overall, if we take a look at the markets here on the 30-minute chart, last week we talked about how we got into this oversold territory on our 30-minute regular trading hours chart. We pushed even deeper. And I mentioned when we have a spike this high that closed up above 8, it usually takes a day to 3 days for the world to kind of shake out, and then we tend to see a panic washout. Now, this is a panic selling. This is people freaking out on a drop, thinking the world's coming to an end. It just shows how sensitive people are on a short-term basis. This isn't the masses. This is just those who are glued to the screens and the news and react on pure emotions. They panic one day. It was strong enough. We have further down session the next day, which was a gap down, which means an exhaustion move, which is usually actually a bullish sign. We did come down to the 20-day moving average. And then yesterday, the futures still ran for half the day, and we saw the market pop. And the market is primed and ready to potentially continue to move higher and have this standout low, the significant standout low on the chart. Now, when we look at the daily chart, it's pretty clear we are in an uptrend. We have a pop, pause, rally, pause, rally, pause. This could very easily just keep on moving higher, and that's what the charts have told us. Our 30-minute chart told us to expect volatility and a significant low. And at this point, that is exactly what's happening. The charts, if you follow them like how I do, usually tells you big turning points are coming, which usually leads news. Usually news comes out around these events, but the charts already put us in the positions, and they already tell us what to expect when that news kind of hits. Again, just a reminder, if you like a 30-minute chart here with our oversold conditions, our panic selling indicators that signal market lows, and our FOMO indicators that signal short-term market pauses. When you're in an uptrend, you don't focus on the pauses. You just know a market's going to pause. You focus actually on the oversold dips. These become standout lows in the charts. If you like all this stuff, trend analysis, again, all this is available in my book. If you go to Technical Trading Mastery, 7 Steps to Win with Logic, chapter 10 and 11 and 12 is all about the identifying trends with moving averages that I use, how to identify overbought, oversold conditions, which are these lime green areas on the charts, and there's red areas in an overbought market condition. Of course, also, if you like to understand the FOMO, the panic selling indicators, and know when there's those dips to be bought up and rips to be kind of trimmed off. So let's take a look at where money is flowing today. In general, we've got money flowing into stocks. We are seeing money also flowing into bonds. We have bonds up 0.5%. They kind of got oversold there, that really beat up and hit some significant lows. Having a bit of an oversold bounce, I think a little bit of fear moving in, but overall we are seeing a bounce there. Where money is flowing out of today, though, is definitely the precious metals space. We're seeing gold down over 2% this morning, which we've been talking about how on the monthly chart it does look fairly like a topping candle. The daily chart here does look like a bull flag, and it is pointing to 37.50 if this gets traction. But if the stock market does keep moving higher, this could close much lower for the month and actually give us a pretty bearish looking monthly chart and signal that we could actually be near a major top. So again, there's mixed signals in the market. If we take a look at these wicks, these upper wicks here where price runs up and then gets sold back down. It ran up. If gold moves down, these are going to be a couple topping looking candles, meaning gold could unwind and start moving down. And the stock market most likely could be moving down with it as well. But again, one bar at a time. Gold is in an uptrend. I don't want to confuse everybody. It is in a long-term uptrend, and you don't want to bet against it until it's proven that it's turned down, and then you can get out of it or focus on falling gold pricing. But right now, the stock market is trending higher. Gold is trending higher, but in a pause. And simply, I think that has to do with while gold is taking a pause over the past month and a half, the stock market has been moving higher, and that's money moving out of a boring asset and into equities to try to make more return. That's pretty much how it works. Money's always flowing in and out of various assets. If it's coming out of one, it's going into another, which seems to be equities at this point. Silver down 1.65%. It's still holding up in a very nice pattern. It's been trading sideways. It's now trading right up at the upper end of its range here. It looks like it is primed and ready to try and have a pop and push higher. But again, we're going to need to see that prove itself. Silver is very dangerous. It is a rocky road, and it takes the elevator or skydives pretty much to get down. It takes forever to get up, and it's a rough go. But the daily chart is pointing to higher pricing. So if the stock market does show some weakness, we could see that final push higher with silver and gold. And silver's got some pretty good percentage upside to 36, all the way up to potentially 37 or 38, which is a pretty big move if the market scenario kind of aligns for that. If we take a look over at crude oil here real quick, crude oil is putting in, it's trying to figure out what it's trying to do here. It does have a short-term bull flag pattern, but it is also stuck here. We've got a little bit of a double bottom. It does have a series of lower highs, so it is in what I call no man's land. It's trying to figure out what it's going to do. And of course, when something doesn't have a clear picture or pattern or trend, we just steer clear. Who cares? Just let it be. Let it figure itself out. Don't worry about what it does or where it goes until there is something worthwhile actually getting involved in. If we take a look over at Bitcoin, Bitcoin's had a nice push up there last week, a little bit of a pullback, but it is having a nice little bounce. Today it's up about 1% or so. This is potentially a high momentum move. We could see this really pick up speed this week. If the NASDAQ and everything does have a pop and push, we could see this move with it and continue to push higher. It is in an uptrend, and it is breaking out and flirting with new all-time highs. So again, you don't want to mess or bet against it. The trend is up. The monthly chart is pointing to $135,000 per Bitcoin. So there is some upside potential when we look at the big picture on the monthly chart. Now, looking at IBIT, which is the Bitcoin ETF, we have been long this. We've hit a couple targets in there. We're still long, seeing if it is going to continue to push higher. As for our URA position, we hit all of our targets and we closed that out on the last trading session. A pretty big move on uranium, massive volume spike. So we're out of that play. We caught a very nice run, and now we're moving on to something fresh. Wait for a fresh new market setup for that particular area. So when we just step back and look at the S&P 500 daily chart, going all the way back to more or less the run up into the COVID high and to the COVID low, you can see our strategy. It's pretty straightforward. It's like a swing momentum strategy, swing position strategy, where the markets can run several months, and when they're green, and we manage it and hit targets. When the market starts to show weakness in red, we move out of equities and move into something else that goes up in value, whether it's cash or a bond play or a currency play. And so that's how we manage our capital through here. You can see we avoided the last big market crash. We moved to a position and slowly made a little bit of money as the market traded lower. We're back into equities, hitting some targets, and now we're waiting to see how things are going. And the whole core of our strategy, again, is to protect our capital. Anytime the market rolls over, whether it's just for a couple of days or for several months, you never know which one is going to be the one that keeps going to the downside and murders more or less your trading account. And so we simply protect ourselves. When the market goes neutral or down, we move out. We move to something else that's going up. And then we just get right back in and ride the market higher when the market gives us signals to own equities. It's pretty straightforward, allows us to navigate the market safely. Again, it doesn't matter if the market crashes 34% or 20% like we just recently saw. The strategy just moves us to the sidelines. It can tell when the trend is changing, when the selling pressure is changing, when sentiment has changed. We have a lot of gauges, a lot of things that come into play to tell us all this stuff. And when the market's going down, we're in something else that is going up in value. So we can profit from both rising and falling markets. And it doesn't matter how long or how big a market correction is, we don't have to worry about it hurting our accounts. And that's where we're at. And of course, the market's been pretty interesting over the past year or so, but the market, I think, is getting close to something very significant, either the start of another bull market or the start of a massive bear market, which I've talked about, that could unwind and destroy and devastate a lot of accounts who don't know how to step aside and identify and manage risk and positions. So if you like the idea of holding assets just going up and stepping aside when the stock market is showing signs of weakness and moving to something else that goes up, so while the markets are falling, we can still continue to grow our account, asset revesting is this strategy. That's what my financial newsletter, my ETF trading newsletter offers. I trade the asset revesting strategy, and I share my exact trades and portfolio allocations and targets, everything with you using this asset revesting strategy. So if you're interested in learning more about it, you want to protect your capital no matter what happens in the world, no matter what happens with economic data and the president and all of that stuff, asset revesting allows us to totally sidestep it, just focus on price and manage our positions, and makes life a whole lot less stressful and a lot more profitable in the long run. Anyways, that's it for now. Take care. Bye-bye.